Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis update is for Monday, October 12th through Friday, October 16th, 2009. Well, what a week it was on Wall Street, folks. You can see from the chart just on the current intraday SPY 10-minute that the market had a continued up move for the last couple days of the week. And if you want to go back even more in the week, you can see it was just a huge move up overall. Overall, the market having its best week since July. The Dow on Friday ending up 78 points, the Nasdaq up 15, and the S&P 500 up 6 on the day for Friday. Now, the keys here, folks, are this. You have some key technical lines you need to be watching. A lot of them right hovering just above current levels on the SPY is major resistance. We are talking about the massive resistance points, double top, 52-week highs pretty much in this market now, yearly highs for 2009 on the SPY at 108. That's going to be a line in the sand, folks. That's going to be a line that this market is going to battle next week and must be looked at as a major level. So watch the 108 level. You pierced at 1.108 and got to about 108.05 or so on this chart, but nonetheless, it's a huge point in the sand. You double topped there, then you sold off all the way down to the master level at 102, and from that point you rallied all the way back now to near the highs in just basically a week's time. Remember, last Friday the market gapped lower, and at that point we hit 102, which again was an in the money stocks master level, signaling a reversal in trend once that was hit in the near term for a boost all the way back up towards this 108 level. Now, you need to look at a couple things here, guys. Number one, the key trend line resistance points and support points on this chart are going to be important for next week based on where we go. Secondly, you need to understand what's going to happen next week. What are the key implications of Monday, Tuesday, Wednesday, Thursday, Friday of next week to understand where this market is going? And I'm going to go into that. Number one, looking at Monday, Columbus Day. What do we know about Columbus Day? Well, it's a holiday. Yes, the markets are still open, but the bond market is not open. That's going to be a key catalyst. Also, remember, Mondays have been notoriously light in volume. Therefore, you have to expect next Monday to be light in volume this coming Monday, which also is even included in the fact that it's a holiday, so you could even have lighter volume. So you could actually test the lightest trading day of the year on Monday, assuming there's no major geopolitical unrest over the weekend that could cause a major disruption in the markets. But again, bond market closed Monday. Therefore, you all of a sudden give the market a little benefit of the doubt based on that. In addition, what you want to look for is the fact that it's a Monday, light volume, holiday, and watch for that to give the markets a neutral stance to possible upside bias for the early portion of the week. Now, Tuesday comes. Now, Tuesday's key because you have some odds and ends in data land that are going to be interesting. You want to watch economic data. Number one, we're talking about some key levels on overall on earnings. And what you want to see here on earnings on the 12th of the week here, which is again Monday, you have Charles Schwab reporting, and then Tuesday the key catalyst is going to be Intel, guys. Intel reporting INTC after the bell. That's usually known as the kickstart for financial earnings, the start of earnings here with Intel, the key technology player. But really, if you want to know what next week is going to entail, look towards Wednesday. Why? Because JP Morgan will report before the bell on Wednesday, and that is going to be a monster, folks. Now, they're going to blow earnings out just like Goldman Sachs will on Thursday. That's not an issue. It's a question of how much do they blow out earnings, and is it going to beat what Wall Street expects on the whisper number? Now, remember, analysts give a certain number, and then there's a whisper number that's usually much above that where these companies are supposed to come in. And if that earnings can beat the whisper number, that's when the stock rallies. If the earnings beat the expectations but not the whisper number, then the stock can actually tumble down. And you can see from the JP Morgan chart, I'll punch up here, that the market here on the daily JP Morgan chart has really had a monster run. Even in the last few months here, going back, here's October, you have August over here, September, and June, July, and so forth, September, and all these months down here going back to about July. Even JP Morgan's had a monster run up, $13 just since really July on JP Morgan. The question is, can earnings justify this increase? Now, the amazing thing about the financials, guys, is that many of these financials are trading near all-time highs. Take a look at Goldman Sachs. Goldman Sachs, a monster here, and I'll show you the Goldman Sachs chart on the weekly. In fact, you know what? Let's go to the monthly chart. Here's Goldman Sachs. Here's the all-time highs. The all-time highs are basically at around $250. Now, Goldman Sachs is trading at $190, just a shade below 190. Look at that master move, unbelievable monster move up. The question is, a lot of these financials did major dilutions. For instance, Bank of America, Citigroup. We know even J.P. Morgan and Goldman doing some secondary type stuff. And the question has to be asked, well, what happens there? Because a lot of these financials are now trading near their all-time highs or 52-week highs. And if you go back to 2007, 2008 when they were making these highs, that's even before they did the dilution. So if you factor in the dilution in stock, some of these stocks are even trading higher than that level. And that's amazing to think, folks, that some of these levels, considering the economy is still in recession, still we're losing jobs month after month, and yet you're still trading near all-time or 52-week highs on many of these financials. Now, granted, in all fairness, they changed the accounting rules. That changed everything, folks. When you change the accounting rules, do bailouts and TARP funds, and then you basically say to them that they can borrow money from the Fed with no interest whatsoever and lend it out for 5, 7, 8%, whatever the going rates are on, depending on what loans they're yielding there or selling out to or loaning out to. That's all the difference. Again, free money and then lend it out. Just free money coming in, profit, all profit, nothing off the bottom line. So, I mean, it's not surprising to see them doing well considering the accounting changes and all, but in all fairness, you have to look at it in realistic terms also and take it with a grain of salt. Now, let's go back to a couple other things. Let's go back to the spiders chart. What I want to show you here, folks, is the 10-minute chart on the SPY. Now, remember, what I want you to remember going into Monday of next week is you have the Columbus holiday, you have the bond market closed, therefore you always want to give the market the benefit of the doubt on those type of days. Tuesday, nothing really going on Tuesday until after the close. That's when you get Intel. Wednesday morning before the bell, you have JP Morgan. Thursday, you have Goldman Sachs. Friday, Bank of America. So the rest of the second half of the week, starting on Wednesday, actually Tuesday after the bell, is going to be insane for this markets. Be ready for it. It's going to be a wild one. Join the Research Center to get the latest updates and all the projections and everything as well. But bottom line is looking at the spiders here, folks. Check this out. Look at this trend line here from the lows on Thursday through the lows of Friday. You can see how that line just continues to connect right through there. The interesting thing I found out about this line is if you take a secondary line even below that, look at this, connect Wednesday's lows all the way through, and you actually have a parallel line, and this means this angle from Wednesday, the angle from Wednesday again, right here, on the upswing, continued on Thursday on the gap up and all the way through Friday. See how this yellow line is parallel to that? That's just a phenomenon that you want to follow in these markets because it's very, very important, because what it means is should this yellow line break to the downside, you generally will see the support line of this yellow line hit as the next target. That would be the next target on this chart. So again, right now we're sitting at the 107.26 level on the SPY, which again mirrors the S&P very, very closely. But should that break, you're going to look for a target of the second yellow line, which again is sloping up. It's a beautiful parallel line that will be support on this market, and you should watch it. Now, overall, folks, Friday volume was very light. Thursday volume was very light. Wednesday, Tuesday, Monday, all very light this week. Interestingly enough, we kind of average about 150 million for the whole week on the SPY in volume. Now, last week, the down week, we averaged over 200 million. So the point being is look at the volume differences. 150 million this week, and we were up 200 million plus, and we were down the week before. You have to also understand the volume, what it means here, what it can mean in this market, and really understand from that aspect about what that could mean should the volume change next week. Watch volume very closely. Volume has become a key indicator in this market because if it's heavy, the markets are dumping. If it's light, the markets are just moving up in general, whether it's getting propped up, whether it's the dollar falling and pushing the markets up, whatever it may be, you are seeing that type of upward momentum in the markets. Now, again, folks, those are your lines to watch for early next week. If you come through the second yellow line, you're going to watch this 200 moving average, which currently sits at about 105.60. If you get through that, you could fall all the way down to about 104, which will be a master level next week, guys. 104, we've already breached it, so it's not going to be nearly as strong as it once was. The last time we hit the master level of 104, we bounced back to 107. Then we went down, took out 104, went to the next master level of 102. We bounced all the way back to 107 again. So 107 seems to be a key play to where we're coming back to. The question is, on the upside now, can it get through that point? And that's what we really want to follow, all right, guys? What you want to watch is the key levels on a closing basis, 107.65, on a double top intraday, 108. That will be your key level. If you close above those levels, you're going to watch for a continued possible move up next week. And again, we will continue to update the premium guys throughout the week in the nightly 40-minute videos. The only last thing I'd like to mention for all you freebies out there that are watching this video, notice the hidden gems. Hidden gems, guys, what a monster today. What a monster all week. I highlighted this Monday after the close based on a closing price of $14.36 for the hidden gems. And again, I find these personally, these hidden gems levels or these stocks that are micro caps, small caps, that are just about to break out. And I have nailed them every month pretty much since the beginning of this report, folks. It's been a monster going back all the way. Look back on once you sign up, you can actually look back on hidden gems going all the way back. Every hidden gems has gone at least 50%, or I think the lowest one was probably 30% in a month. Most of them averaging close to 50 to 100%. This one already in 4 days on the SKBI, SkyStar Biopharma company here. This is a Chinese biopharmaceutical company. This one already over almost $5 to the upside from where I mentioned it to the high today at $18.99. That's from $14.36 in 4 days, Tuesday, Wednesday, Thursday, Friday, to $18.99. Just alone, that pays for the years and years of the research center alone if you just do 500 shares or 1,000 shares of these. It's a no-brainer for sure, guys. Anyways, have a wonderful, wonderful weekend. Watch the key levels I talked about, folks. Come join the research center to get all the in-depth analysis, technical analysis, get the hidden gems, get the technical tactic educational videos, get the daily market report, pro trader watch list, hot charts and alerts. I just added a new thing to the hot charts and alerts tonight on a key stock that looks like it's just about to top out here. You want to be on top of that. Definitely on the short side. It's going to be a key